Welcome back to Market Fatafat, and let's welcome our next technical expert for today. And Aditya Agarwala is joining us right now. Hi Aditya, very good afternoon and thank you so much for your time. We will come in a bit to you to know the stocks that you are tracking at this point. But before that, let's have a quick look what Nestle India is doing, because this counter is surely in focus on the back of a note that is coming in, wherein Citi has come out with a note. They are saying that the management estimates Indian branded F&B market to clock in 12% year-on-year growth between calendar year 23 and 28. The near-term demand remains robust and primarily being impacted by this steep food inflation across the categories. The M&A opportunity is evaluated based on the strategic and the cultural fit and the growth opportunities, and they are looking closely to that. And the innovation to the sales contribution has increased 6% in 2023 versus targeting to improve this to 10% in the medium term. So those are the commentaries that is coming from Nestle. I'm not the sector expert here. Winnie is here, so Winnie might can
we do have earnings also that will be coming out tomorrow from Nestle,
Yeah.
so that's also something that we should keep an eye out on. But interesting that we're keeping an eye out on in terms of the note that's coming from Citi today. Clearly a bit of a subduedness. The numbers, what we're expecting, nothing bad this time in terms of a number. We're expecting, in fact, a better set of numbers from Nestle this time. So yes, interesting to watch out for from Nestle India. But let's move on then. I'm going to go out of my sector, not always Nestle that I want to talk about, giving that a break. But RVNL is the stock that we're going to talk about. Just a short while ago, you saw some flashes on the bottom of the screens. Now, KRDCL and RVNL's JV has actually emerged as the lowest bidder, L1 bidder, for the Southern Railway for redevelopment of Thiruvananthapuram Central Railway Station. And this is going to be for EPC, that's engineering, procurement and construction. The cost of this project is around 439 crores. So yes, keeping an eye out on that. It's expected to be completed in 42 months. And this is a JV of around 51% which is held by KRDCL, while RVNL holds around 49% in this JV. So interesting to watch out for from RVNL, at least where that is headed. But one more order coming in, keeping the stock abuzz, 2.5% uptick as of now.
All right, that's about RVNL, but Aditya, take us through what's happening with Hindalco. We have been just highlighting how the whole AB group of counters are buzzing, and for Hindalco, it's the middle pack that is shining bright. How are you looking at this counter right now?
Good afternoon, Vinny. Good afternoon, Shrishti. Thanks for having the show. Oh, the entire metal pack is buzzing, as you mentioned, and Hindalco happens to be just one of them to look interesting on the chart setup. It's a fresh breakout from a trendline resistance heading into an all-time high territory. I believe there is decent room still left on the upside. It's a fresh breakout on volume, so that's a positive sign. If I take a look at the technical indicator setup, that is also suggesting bullishness. So even at current levels, I would recommend one should definitely go ahead and buy the stock. A good support on the downside at 615, 610, and can look for a target of 675 to about 700 on the upside. So that's like a good positional target that I'm getting on the stock. Thumbs up from on all parameters as far as technical setup is concerned. So Hindalco is looking interesting. At current levels, definitely should be bought with the stop loss at 615, target 675 and 700.
Okay, keeping an eye out on Hindalco with the levels over there that Aditya just mentioned. Let's move on, talk about Sudarshan Chemical. Lunch, the second day that we are picking out this stock. Today we have a different reason than yesterday at least.
Yes, the stock is up 2% in trade today. The company has actually launched a new product, Swamica Gold, which will be available globally, including Indian subcontinent, Southeast Asia, Middle East and Latin America as well. Also on charts, if you'll see, the stock has actually touched a 2-year high on intraday basis, which shows positivity in the stock. Also, it has registered biggest single monthly gain in almost 3 years. So for those reasons, the stock is in focus and positive today.
All right, that's about Sudarshan Chemicals. But Snehi, what's happening with SH Kelkar? Tell us, why is this counter in focus today?
Counter is in focus and it is trading with some deep cuts of almost 6% as we speak, because the news is not positive. Fragrance and flavor maker company has reported fire incident at its Washivali facility in the state of Maharashtra yesterday. yesterday. They did say that there was no loss of human life and the safety of all personnel was also ensured, and they've said that the company has adequate insurance cover assessing equipment and business loss for fire. The fire has now subsided and the company is currently assessing the extent of equipment and business loss resulting from this incident and will provide further updates to stakeholders as more information becomes available to them as well. But at the moment, the fire is subsided and there is no loss to life, and the company says they have adequate insurance. But on the back of this news of this fire in their Maharashtra facility, the stock is down almost 6%.
Okay, surely keeping an eye out on, SH Kelkar. That's a stock that's a bit subdued in trade. But let's move on, talk about Ircon International on the charts and technicals then. And Aditya, today the stock is buzzing away in trade. The stock has been buzzing in the last 6 months when you look at it as well. And no surprise there in terms of the last 1 year, we've seen almost a jump up of almost 250% in terms of the stock move from somewhere around 50-60 levels today to 237. I don't know what more to ask. Are you still expecting a further upside, or should one start booking the profits now?
Definitely, Vinny. I'm not expecting any profit booking here. In fact, the reason why I picked up the stock is I believe after a good consolidation, stock is gearing up for a next leg of up move. I agree totally that stock has come up from 60 odd levels to about 280, but from 280 stock has also corrected all the way down to 200 odd levels. From there, it went into a sideways consolidation phase, and now it's broken out from that sideways consolidation phase. And I see much higher levels for the stock. Immediate targets will be again back to the previous peak, which was 280. Once that is taken out, I believe stock can test levels of 330 as well. So it offers a good risk to reward at current levels. And on the downside, 220 is a good support area. Plus, if I plot an RSI and an MACD, I see a breakout from the trigger line on both the indicators. So overall, looks like a fantastic stock to look at. And Railways making a comeback. So why not look at Ircon International, which is showing decent outperformance and a fresh breakout on charts.
Right, that's about Ircon, but moving on, and let's talk about M&M Financials. We all are aware of the news that there has been fraud detected in one of the branches of 150 crores, and the company has also deferred its earnings. But today, brokerages have come out with a note, and multiple brokerages rather. First of all, let's highlight what Macquarie is saying, that they are highlighting that it could be a challenge to another re-rating, and they're skeptical about that whether or not this will be another re-rating candidate or not. Talking about BofA, they do say that the branch fraud will raise concerns on the process transformation efficacy. Jeffrey is saying that though the fraud amount is just 15 bips on the overall loan, the impact will be low, but the amount appears large for a branch. The branch that was handling and 150 crores of fraud has been detected there. And lastly, Citi is saying that the fraud incident will spook the confidence yet again, and that's why second day on the trot, M&M Financial is under pressure.
Absolutely, that's a bit spooky that comes in there, and that's a bit of a jitter, and that's why that fall in the stock today as well. Not as much as yesterday's sharper fall, but yesterday also down 1%, more than 1%. Let's move on, talk about some of these other metal names. I know we did highlight a few metal names earlier as well, but today we're going to talk about a note that's coming from CLSA on metals. This is two stocks, Hindalco as well as Vedanta. Now, what CLSA is saying that the Middle East conflict, the macro environment is something that will drive the commodities, and prolonged Middle East concerns and this conflict will have an impact, accentuated impact, you could say, on the energy-linked commodities and transportation costs, which would drive up the cost curves. Now, who does this benefit? They believe that metal companies would be better placed at giving a high backward integration and domestic sourcing from key raw materials, so they benefit Hindalco as well as Vedanta among the ferrous names. Also, they analyze and indicates JSPL would have higher earnings given elevated rebar prices. So yes, these three companies we're keeping an eye out on: Hindalco, Vedanta, JSPL. All the metal pack actually is buzzing in trade anyways in general, so keeping an eye out on that. Today, both of these stocks holding on to good gains.
All right, moving on, and let's talk about Zydus Life. Snehi, take us through the news flow. Zydus Life down in trade today.
Zydus Life is down in trade today, almost 2.5% lower as we speak. The pharma firm has said that the US FDA conducted an inspection at the injectable manufacturing site situated at Jarod, which is near Vadodara. Now, the inspection was conducted from the 15th of April to the 23rd, and the inspection has closed with 10 observations. The company will closely work with the US FDA to address and respond to the observations in an expeditious manner. This is what the company has said in communication to BSE. But on the back of these 10 observations that have been flagged off by the US FDA, the stock is doing poorly today, down 2.5% as we speak.
Well, yes, Zydus Life is down about in trade on the back of US FDA inspection and observations. But another news flow is that one of the recent drugs, Vinny, that for Lupin as well as Zydus Life, the both companies announced that for an overactive bladder, they're going to be launching in the US market. That was expected to be a big opportunity drug. And today, what we're getting to understand that has been put on halt for now. And that's indeed a negative news for Zydus, putting some more pressure on the stock. And even Lupin is in focus, a negative news flow for Lupin counters.
This was just announced a few days back itself.
Yes,
right?
just a couple of days back. And that's why we are seeing that both of these counters are not doing much in trade today.
Okay, let's move on and talk to the next stock then. Tata Consumers clearly under pressure today, Ansh, after its earnings. What were the numbers looking like? What are the brokerage notes saying as well?
Yeah, so the stock is down around 4 to 5%. They have actually reported revenue of 3,926 crore, which is up by 8.5%. Even EBITDA is up by 23% from 512 crore to 630 crore. We are seeing improvement in margin as well from 14.15 to 16%. But their profit has come down by around 22% from 345 crore to 267 crore. This is due to exceptional loss of around 215 crore due to adjustment of acquisition and asset write-down. The company has also recommended final dividend of 7.7 rupees per equity share. Also, if we see the chart, the stock was actually trading along the upward sloping resistance trend line, and today it has fell from there, slipping below its 20 and 50 DMA levels.
Okay, and I'll just quickly mark the brokerage. Goldman Sachs is maintaining the neutral rating. The earnings for them, especially on the India front, that's slowing down, and that is the reason why brokerages are not too enthused by the numbers. Even CLSA maintains the underperformed rating as well. So yes, not too enthused by the growth that they were seeing on the top line front or even the profit front. That was a miss for CLSA. So yes, keeping an eye out on Tata Consumers under pressure today because of the numbers that came in, as well as brokerages not too excited. But with that, let's just step into a very short break. Don't go anywhere. We'll be back with more updates after the break.
Welcome back to Market Fatafat, and let's keep it going with all the buzzing stocks today. And let's talk about Eicher Motors then, because UBS has come out with a very interesting note. What they're spotting is that though there were a lot of concerns regarding how Eicher Motors will be placed in the times ahead when it comes to the premium motorcycle segment, but UBS is saying that they see the 450cc segment to be the growth trigger in the next 4 to 5 years. When it comes to Harley Davidson, then they're saying that the product customers' eyes does not add up to the Harley Davidson imaginary. And when it comes to Bajaj Triumph, they are saying that though it has a strong performance, but the brand pull beyond metros remain absent for now. But lastly, Royal Enfield's channel stock is just 15 days of the sales currently, while it remains much more for the competition. So clearly they are spotting that the demand trends is once again skewed for Eicher Motors. That's UBS take on Eicher Motors. They do maintain their rating on this counter with a target price of 5,000 rupees. So the target price is not much far from the current market price, but nonetheless the commentary is really positive, and that's why the stock in focus today.
Okay, surely keeping an eye out on that. And Shrishti, let's just pull up the charts of Nippon Life next. We do have Nippon Life Asset Management's numbers that have just come in. And when you're looking at it, a good set of numbers, at least on the first cut that you're looking at it. Look at the revenues, up by around 34%. We're seeing the profits of the company, a growth of around 73%. 343 crores is the net profit of the company versus just 198 crores last year. Margins also, we're seeing a significant improvement of 210 basis points for Nippon Life Asset Management, and that's keeping the stock a buzz as well. Let's pull up. I would request my producer to actually just show the charts. I want to see whether there was a specific spike up, because right now also I can see it's moving towards a 10% mark right now, Nippon Life Asset Management. That's the spike up there you can see, right? Just the numbers were announced. Look at it, seeing the sharp uptake after the numbers. And the board has also declared a final dividend of around 11 rupees, I beg your pardon, per equity share. So that's what is keeping Nippon Life Asset Management in focus today on the back of its numbers, buzzing away in trade, 10% uptake, day's highest point for Nippon Life.
All right, that's stellar gains and stellar spike on Nippon Life. But Aditya, let's talk about Havells then. All this consumer-related stocks, especially the summer theme-related counter, seeing no stopping. What about Havells? How are you looking at the up move in this?
So Srishti, it's yet to break out from that resistance of 1580. Once it breaks out of that resistance of 1580, I'm looking at a target of 1750 to about 1800 on the upside. I believe there's a big up move which is coming in the stock. Look at the likes of Crompton, look at the likes of Voltas and Blue Star, and all of them have been buzzing around. Havels have also outperformed of late. It's entered into a consolidation though. So I believe it's getting ready for a breakout, fresh breakout above 1580. For a target of 1750, 1800 with a stop loss at just 1550. I think it makes a very good buy. And plus, again, if I plot both my indicators, RSI and MACD, both have given a positive crossover. So I believe it's time to start looking at Havels and maybe move away from Voltas or Blue Star to maybe Havels, because the outperformance here will be significant in the coming weeks.
All right, that's about Havels, but Snehi, take us through what's happening with ICICI Prudential, because this counter was down in trade today on the back of the earnings. Take us through the fine print.
Well, yes, Shrishti, absolutely. Now, poor set of earnings, rather weak set of numbers coming in from ICICI Prudentials, but the one weak spot that is present in these earnings is the VNB margins for Q4. That was down 1,052 bips on a year-on-year basis, or 140 bips on a sequential basis to 21.5%. So this is the real pain point that's coming in for this stock. Now, on the back of these numbers that we did see coming in yesterday, we have a whole bunch of brokerage notes coming in, starting with Morgan Stanley. They've downgraded the stock to equal weight from an overweight and cut their target price to 610 from 660 rupees. They say that this is another quarter with a large miss in VNB margins, and higher costs could also be reflected in part in FY25 as well going ahead. Next up, we have Nomura, who's also come out with a note. They've downgraded the stock to a neutral rating from a buy rating. Target price kept at 600 rupees. They believe disappointment on margins will continue. Growth is picking up, but margins and VNB growth are below expectations. Then Nuvama has maintained a whole rating with a target price of 590 rupees. Macquarie has maintained a neutral stance with a price target of 540 rupees. So while on the back of this slip in VNB margins, we're seeing rather bearish notes coming in on this stock, and which is why the stock is under pressure today.
Surely keeping an eye out on ICICI Prudential Life. Let's move on to the next stock that's not doing well in trade, Tata Elxsi. And Ansh, this is on the back of its numbers as well.
Yes, that's right. The stock is actually down by around 5% in trade today. They have reported revenue of 905 crore around, which is down by merely 1% on quarter-on-quarter basis. But the profit, that has come down by 4% from 206 crore to 197 crore. EBIT has also come down from 245 crore to 234 crore, which is down by around 5%. We are seeing down in margin as well from 26.8% to 25.8%. Also, if we see the chart, the stock has given a breakdown from its key support of 7,400, triggering negativity in the stock. In addition to that, the stock has also touched 8-month low on intraday basis.
All right, that's about Tata Elxsi, but Aditya, let's talk about eClerx then. All these IT majors are not doing that well, but how are you looking at the chart of eClerx? Do you believe that there could be some more pressure in this counter going ahead?
On the flip side, Srishti, I think this is one stock which can actually buck the trend and then head higher. Looks a very interesting chart. In fact, it has outperformed also recently and now entered into a consolidation just ahead of numbers. We're seeing a good buying in the stock, and I think it has formed a base closer to about 3,200, and from there it's showing good up move. So closer to about 2,200 is where the supports are. With the stop loss close to that, I think stock is poised to take good support there and head levels of 2,800 on the upside. So it's a good risk to reward trade given the fact that it had entered into a consolidation. I'm seeing good reversal on the indicators as well. Plus it's a low hanging fruit. So I think eClerx, I will stick my neck out and go for a long trade rather than going for a short trade or book out profits with the stop loss close to about 2,300. I think stock is poised to test levels of 2,800 in the near term.
Okay, let's move on to the next stock. At stock number 33, we're going to talk about SBI Cards. They've introduced its inaugural travel-centric core credit card, SBI Card Miles. And this is in a press release that they announced yesterday. The card promises a comprehensive travel benefit, including conversion of travel credits, air miles, hotel points, enhanced rewards on all the travel bookings, and access to airport lounges, keeping the stock a bit in focus, up almost 7/10 to 0.8% in trade, but surely an interesting one to watch out for in terms of the launch that is coming from SBI Cards.
All right, that's about SBI Cards. But Ansh, take us through what's happening with Power Grid and what's the news flow here.
Uh, right, so the stock is up around 2% in trade today. Supplementary joint venture agreement has been signed yesterday by shareholders of NHPTL, that's NTPC, NHPC, Power Grid, DVC and CPR. This agreement is based on the agreed revival plan planned earlier reached upon within the parties. The revival plan comprises equity transaction between shareholders with an outcome of revised equity holding of Power Grid in NHPTL as 50% and remaining 50% of equity to be held equally, that is 12.5% by the other 4 JV partners.
Let's move on to the next stock then. And Snehi, you picked out Bajaj Finance for us. Why is this one in focus? What's the news for you?
Well, Vinny, this stock is in focus on the back of its earnings that are expected to be declared tomorrow, and a good set of numbers is expected both on the top line and bottom line when it comes to Bajaj Finance. When you look at it from a consolidated view on a year-on-year basis, net interest income is seen up almost 29%, operating profit also expected with an uptick of 31.6%, and PAT is seen up 16% as well. However, on the net interest margins, the NIM side, a slight bit of a contraction is expected to come in at 10.3% versus 10.5%. Now, when you take a look at it, the asset quality sequentially, a sharp spike in ROA is expected at 12.6% versus approximately 5% in the previous quarter. However, return on equity is seen with a slight bit of a temperament over there, 19.6% versus 22% coming in. Provisions also expected to be slightly higher this time around. Now, what can we expect from the numbers? NIM contraction is likely to continue. Cost to income ratio is expected to remain steady. Credit costs are expected to decline by roughly 5 bips, so marginal cut coming in over there as well. Cost of borrowing, however, is expected to increase. Now, key monitorables this time around will be the asset quality in the unsecured portfolio, RBI actions on EMI as well as e-com cards, and listing plans of the housing subsidiary as well. So, while all eyes will be on Bajaj Finance's numbers slated to be released tomorrow.
All right, that's about Bajaj Finance, the earnings expectation. But Aditya, take us through how are you looking at the chart of Bajaj Finance just ahead of the earnings? Are you also seeing some of the long build-ups getting into the system?
Oh, absolutely, Srishti. I think it's time to buy the stock. Maybe ahead of the numbers, I see buying in the stock. So definitely there is smart money getting into the stock at current levels. In the recent correction, it took support at 50% retracement, Fibonacci retracement level, and from there it's bounced back. I see levels of 7,800 to about 8,300 in the near term in Bajaj Finance, with a good support on the downside at 7,000 levels. So with a good support at 7,000, it makes a fresh buy for target of 7,800, 8,200. Plus, the indicators are also suggesting and supporting the bullish view overall. And mind you, if it crosses 8,200 and closes above 8,200, stock will enter into a fresh uncharted territory, and then we can see new highs for the stock. So overall, at current levels, looks like a very attractive buy, and one should continue to hold if it breaks beyond 8,200, which I believe can happen in a month or so.
It stands on Bajaj Finance, but a positional bet. Let's mark the numbers on the bottom of the screen. That's Equita Small Finance Bank coming out with the earnings. Doesn't seem like an impressive set this time around because the interest income has seen a jump of 25%. The profits have also seen a jump of close to 9.3% on a YOY basis. But look at the asset quality and the provisions, because provisions have inched up 26% on a sequential basis, as well as when we talk about the GNPA and the NNPA. So the asset quality has seen a deterioration between 4 to 8 bits on a sequential basis, and that's why we are saying that the stock in the just ahead of the earnings was holding steady, but as in the numbers came in, the stock saw a sharp cut of 2%. So that's the latest earning report card of Equita Small Finance Bank.
Absolutely, keeping an eye out on Equita Small Finance Bank. Provisions slightly higher also on a quarter-on-quarter basis. But let's move on to the next stock that we're going to talk about, and that is Varun Beverages. Snehi, why are we keeping an eye out on Varun Beverages today?
Vinny, Varun Beverages is in focus on the back of PepsiCo's results. Now, PepsiCo is one of the largest franchises of Varun Beverages that has reported better than estimated first quarter results. Profit and revenue of the company has grown on the back of demand for its sodas and snacks, the likes of Cheetos and Doritos in international markets, even though it has witnessed a slowdown in the United States. The volumes have grown in high single-digit range for the beverage segment and double digits for the snack segment. The company's market share in the snack segment has also improved. So on the back of these good numbers coming in by PepsiCo, Varun Beverages is in focus today, and stock was doing pretty well earlier in the day, but right now up almost 1% as we speak.
Only keeping an eye on Varun Beverages, but Ansh, signed DLM, that's a stock that you're going to talk to us about. Why is that in focus?
Right, so the stock is up around 6% in trade today. They have reported revenue which is up by 31% from 277 crore to 362 crore. Also, the PAT has gone up by around 80% from 12.6 to 22 crore. We are seeing order backlog of around 2,170 crore as well. Also, if you see the chart, the stock has given a good breakout from its double bottom chart pattern. So for those reasons, the stock is in focus.
Surely keeping an eye out on side DLM as well. Let's move on, and actually that was the last stock for today. With that, it's absolutely an end to this edition of Market Fatafat. So thank you so much, Aditya, Amar, Ansh, as well as Snehi for joining in with us. And it's a goodbye from Shrishti, myself, as well as the team who put this show together.